Hello, everyone. Welcome back to Personal Finance for Us. Today, we're going to be continuing our sub-series on playing financial defense. Today's topic is going to be car insurance. Do I have enough coverage? Financial defense, again, is going to be really foundational in protecting the assets that we are working to build. We're trying to build wealth, and we don't want something like not having insurance to make that all come crumbling down. So without further ado, let's get into it. Car insurance, what's covered? So car insurance can get a little bit weedy, just like many other types of insurance, really because there's just so many different scenarios you can find yourself in. Single vehicle on property, so you could be backing out and knock over your own mailbox. You could be backing out of your driveway and knock over your neighbor's mailbox. You can be backing out of your driveway and hit an oncoming car. You could run over a pedestrian. There are so many different types of scenarios. So when you discuss car insurance, it can get a little confusing, but the big one is going to be liability insurance. So what is required? Most states only require liability coverage. Don't ask me why. It's only most states and not all states, but most states only require liability coverage. What does that mean? So this kind of coverage effectively covers property damage or personnel damage to the other party. If you're found at fault in the accident, your person in your damaged vehicle is your fault. Nobody really cares, but you can't go damaging other people's stuff and not have the ability to pay for it. When you finance a car, oftentimes the banks will require collision insurance. Collision covers the vehicle that you are in, obviously because the bank wants to protect their asset while it's technically still theirs. From the NHTSA. The NHTSA reports that about 6 to 7 million motor vehicle accidents happen annually. CDC says that each year in the United States, about 3 million people are non-fatally injured in motor vehicle crashes. They also say that, as we know, crash-related injuries are costly. Medical costs are only skyrocketing in America. They estimate that medical care costs and productivity losses associated with injuries and death from motor vehicle crashes exceeded $75 billion in 2017. Medical care costs after motor vehicle collisions. Emergency room visits for MVC usually average about $3,300. Again, if you look at most coverage limits, that's well within. However, if victims are hospitalized, the costs shoot up, and that is estimated to be about $57,000 over the lifetime of the injured party. New car prices. So we in America, we love a newer car. We are conditioned to think that if a car is more than 3 years old and has more than $50,000, it has more than 50,000 miles on it, that it is going to explode and it's going to just be this sinkhole for our money. We like newer cars in the US, and that's why it's so easy to finance one. So chances are you get into an accident, it's going to be with somebody with a newer, more expensive car. The prices of these cars have definitely gone up. The average new mid-size car in the United States is about $25,855. Interestingly, fairly recently, if you keep up with this sort of thing, you know that US automakers have effectively abandoned making smaller cars because of the popularity of trucks and SUVs in the United States. So just let your eyes gravitate down there a little bit, and you will see that the average midsize pickup truck is about $33,800, and the average midsize SUV crossover is about $38,000. So file this into the back of your mind when we are talking about these coverage limits. Cars are expensive. All right, so how do you understand your liability coverage? A lot of times you will see it written like this: 20, 40, 10. These are called split limits, so it tells you how much your total liability coverage is split. So your insurance policy may be $70,000, but there's limits on what the insurance company is going to pay for within that $70,000. So the above example, $20,000 is for bodily injury to a single party. $40,000 is the coverage limit for bodily injury to all parties, and $10,000 is property damage limit. Now, that may not sound terrible, and for minor accidents, fender benders, it's not. But for more serious accidents, well, we're going to go through a scenario here in a little bit. At the time of this recording, the state of Florida only requires 10, 20, 10, or 10,000 in bodily injury max individual, 20 to all parties, and 10 to property. Side note, Florida does require something called no-fault insurance, also known as personal injury protection, or PIP. And PIP effectively is coverage for yourself. So that's pretty good to keep in mind, so that if you do get into an accident, at least you have some protection on your part, but not every state requires that. All right, so here's a scenario. Now, I'm picking on Florida, one, because those coverage amounts, I should say, were very low. Two, my husband's from Florida. And three, if it's freaky and weird, more freaky and weird than regular freaky and weird, it probably happened in Florida. So you're a Florida driver. You are found at fault for a two-vehicle accident, you and the other party. The other vehicle was a luxury vehicle where their airbags deployed, aka car is totaled. The driver of that vehicle had his wife and their child in the car. All three parties went to the hospital and were admitted for injuries related to the accident. Ouch. When the smoke clears, you find that their total vehicle was worth $40,000 and their total hospitalization costs were $60,000 or $20,000 each. Ouch. So here's a breakdown of what that looks like with the minimum Florida coverage of 10, 20, 10. So $20,000 per party. That means for the driver of the other vehicle, your insurance is only going to cover 10 of his $20,000 expenses. Remember, the max for all parties involved for the other vehicle is $20,000. So his wife and his child also have $20,000 each, for a total of $40,000. Again, your insurance is only going to cover 10. Why? Because the max is 20. Their vehicle deemed to be worth $40,000. Your coverage is only covering $10,000 out of that 40. So what's left? So for the other driver, that's $10,000. For the passengers, that's $30,000. And for their vehicle to replace, that's going to be another $30,000. That means you are on the hook for $70,000. Now, I don't know about you, but my 3 to 6 month emergency fund is nowhere near $70,000. I'm not living that large. Maybe you are, and if that's the case, this video probably doesn't really apply to you because you got it like that, but I certainly would be up a creek with no paddle in the event of a $70,000 event. What if you have better coverage? Bodily injury is one of the most expensive pieces to the insurance puzzle. As we've discussed, medical care in the United States is very expensive. The outline scenario isn't terribly far-fetched. Yes, most accidents are minor, and when you look at statistics on the average cost of care related to motor vehicle crashes, remember that's going to kind of skew the numbers down some, but a big enough accident can come with some huge medical bills and some huge liability bills. So let's run this exact same scenario with a 100, 300, 100 policy. So here's a new breakdown. So the driver again had $20,000. His wife and child had $40,000. Our new coverage limit is 100, 300, 100. So that's 100 for a particular individual or 300 total for all parties. Their medical costs are way under that. The driver is just 20. So he's covered, well covered. All parties is $300,000. His wife and child, well covered. That $60,000 doesn't even almost touch $300,000 worth of coverage, which means we come out of pocket $0. We also got $100,000 in property coverage, so their luxury $40,000 vehicle is covered. This means we are left liable for $0. That's a much, much better scenario. All right, so for a little bit of discussion, I've been an emergency room nurse for several years. I've seen tons and tons and tons and tons of motor vehicle accidents. Most people are going to walk in and walk out on their own power. That's the most. Most are minor. Most are fender benders, and today's cars are engineered in such a way that the cars are going to crumble before we do. Now, you could make an argument with that being said that cars are totaling very easily. It doesn't take a whole lot for airbags to go off, so lives are being saved, but cars are getting killed. So that alone is argument for more property insurance for sure. But I've also seen the other side of the spectrum. I've seen people not make it after accidents. I've seen kids not properly restrained, unfortunately don't make it from accidents. I've seen some ugly stuff. I've also seen a lot of the more middle ground where they're going to make it. There's no life-threatening injuries, but some of those injuries are expensive. So, for example, I did work in PACU for a year at a trauma center. PACU means post-anesthesia care unit, which effectively is the recovery room. So the place where you go after surgery to wake up from surgery. That being said, I saw a lot of post-surgery traumas, many of those related to motor vehicle accidents. So I can tell you guys firsthand from my anecdotal experience, some of these orthopedic injuries, and they're very common after bad enough accidents, they are extensive. If people have what we call open fractures, meaning that the skin is open and the bone is exposed, those sorts of injuries take a lot of times 3, maybe even 4 different surgeries. I'm sure you guys all know this, but surgery is not cheap. It's not cheap. So if you get into a bad enough accident and you're at fault, somebody needs multiple surgeries, not only that, even after they're hospitalized, they're going to have to keep going back to the orthopedist and keep getting cast adjustments and things like that. These are all expenses that you could be found liable for, and it's expensive. So, I'm just a girl on YouTube. I don't give insurance advice or medical advice. I'm not a financial advisor. But when I look at what I do know, what I have seen, and when I look at the coverages, it just makes sense. It just makes sense. So, for example, we were not that low. We're definitely initially had coverage way higher than the Florida minimums, but it wasn't 100, 300, 100. I want to say maybe we had half-ish that coverage. So I go on my insurance site, I get a new quote. The difference in almost double, or maybe a little bit more than double the coverage, was ridiculously nominal. What do I mean? I mean, prior, for, I don't know, I'm not even going to guess because I honestly don't remember. But our prior coverage, we were paying, I think, $123, $125 a month. The upgraded coverage is $150 a month. So literally, to get double or maybe a little bit more than double the coverage, it's only costing us an extra $25 or so a month. It just makes sense to get the better coverage, especially when you're working on getting debt free, or if you're already debt free, building up your emergency savings, working on accumulating assets so we can accumulate wealth. It just makes sense to throw an extra $25 or so at something as important as motor vehicle insurance, especially since I think one statistic I saw was still over 64% of Americans commute to work every day via a personal vehicle. I don't think cars are going anywhere in the too near future, but most people still drive. Some drive many miles. Accidents are always a threat. So it just makes sense to have really good insurance coverage. All right, guys, that is going to do it for this video. Thank you for tuning in again. This has been Personal Finance for Us. I hope you got something out of today's video. I hope it gave you some things to think about. I hope you guys never getting into a serious enough accident to ever need that much coverage, but I hope it's giving you something to think about, because bad things can and do happen. So it's better to just be prepared for it rather than pretend that it couldn't possibly happen, because it can, and unfortunately bad things do happen. So thanks again for tuning in. I'll see you guys in the next video. Peace.